Hey everyone, welcome to another video on the channel. Today we're going to be taking another look at ZIM, Integrated Shipping Services Limited, also known by the ticker symbol ZIM, Z-I-M. So, since the last we spoke about ZIM, the stock has continued to trend downward. Although we could see that we've entered the mid-20s, we may be forming a bottoming out pattern. We'll see if this plays out. But it's gone to about 23, but it hasn't been pushed below that. We've seen, like the other day, there was a big spike in buying volume, about a 9% spike. So could this be the beginning of a new uptrend for ZIM? Will ZIM continue to trend downward? I mean, nobody really knows, but let's go into some of the factors that may be impacting ZIM right now and what we might look forward to looking towards the future. First and foremost, I gotta just bring this up. Damn you, Kramer. Maybe he's laughing at us right now or laughing at the ZIM community, but he did say this some weeks ago. He made a comment saying that he was avoiding ZIM or whatnot. And sure enough, the stock has continued to downtrend, so maybe he was right. Or maybe he'll be proven wrong if there's a reversal or the stock price starts to gain some legs. But I just thought that was funny. I couldn't help but bring it up. Now let's get into the real meat and bones of this matter. So, ZIM does have some tailwinds that are crushing the stock right now. Many of them are obvious to us that we've discussed previously, such as the fact that freight rates are rolling over. To get back to our original thought, well, is this the bottom? Will this reverse? I mean, tell me what the freight rates are going to do, and I will be able to give you a better answer. Although, of course, I'm not a financial advisor. This isn't financial advice, but that's just where we're at right now. So here's the Drury World Container Index, which we see since the end of 2021 has just been consistently declining. And our old friend, the Freightos Baltic Index, which we've looked at many times, again, it's just continuing this decline. It hasn't necessarily fallen straight off a cliff, but it's definitely continuing to decline. And what does that mean for ZIM? Of course, it means they're not going to be making as much money. Now, this is well known, and again, I mean, we'll find out where the index bottoms out, and if that might be a potential buying opportunity, we'll have to see. The other thing to consider is ZIM did, or actually, this is an interesting point. So, around early 2020 over here, that was the point where ZIM was basically just like breaking even. They went public early last year. They were barely breaking even at that point. Of course, that was actually last year over here. Of course, as the rates have gone up, they've made a ton of money, but they went from barely breaking even in early 2020 to bringing in profit margins of 40 to 50% around this area in late 2021 and early 2022. So, if breaking even is down there around, let's say, the 1,500 or, below 2,500, if we could stay above that rate, we should be making money. We should be consistently making money. Of course, it's not going to be the way it was at the end of last year, where we were just bringing in boatloads and boatloads and boatloads of cash, but it's still in the positive, which I think is always kind of worth remembering. But, other than the freight prices, another thing, ZIM currently has 149 vessels. What is going to happen when demand slows down? And we could, figure that the price will decline if once with recessionary fears, wherever, if there is a decline, there maybe, people starting to say, well, the market's oversupplied. We have way too many of these container shippers out there sailing the high seas. So, of course, that will further add to this negative pressure on freight rates, which will be a negative catalyst for ZIM. Now, to the extent that that plays out, depends A, on the economy and how that's doing, and B, of course, with how ZIM manages their contracts, because of course a lot of their clients are locked into these contracts, how they manage them, how they negotiate them or renegotiate them. Now, that is going to determine a lot. Now, this author makes a good point too, I thought, in terms of one of the big selling points of ZIM, obviously, is their dividend. That's why most retail investors, even have ZIM on their radar. It's they want that income. But, a counterpoint to that could be like, well, when you see that shipping rates are collapsing, maybe this isn't the best time to be paying out all that cash to your investors. Maybe it's a good time to hold on to some of that cash and to help you weather the hard times. Now, that's a valid point, but also, as we've said, and of course, here we go, like you could find endless articles of people just saying like, oh, ZIM, crazy monster dividend or whatnot, but how does that really help us? I mean, because the thing being, keep in mind too, ZIM is holding on to a mountain of cash, which we'll get into in a second. So in terms of like, well, maybe they should be holding on to it, not paying it out, that's reasonable, but it's also worth remembering they have so much cash sitting around. And as if you're a stockholder, maybe you don't mind the fact that that's being paid out to you, especially given ZIM's management and the fact that they've weathered these kind of storms in the past. But it is a valid point. And furthermore, always keep in mind the container shipping industry, it's incredibly cyclical, and we've seen it. So during the first phase, of course, there's undersupply, so shippers start bringing more ships onto the market, rates go up, and it's the good times. People start making a ton of money. Then the market peaks. We saw this earlier this year in 2022. The market peaks. We're making record profits, but then shipping rates, of course, decline and go down. A lot of the less nimble players collapse or are just crushed, and then you have a state, because they're crushed and collapse, of undersupply. So just keep in mind, that's the cycle. That's the cycle, the way the cycle has played out many, many times in the past. It's the way it'll play out, I'm sure, this time or, in the future. It's just the way it is. And a lot depends, of course, on the macroeconomic situation, which, to beat a dead horse, because I might as well just beat it again, everyone is talking about a recession. A recession would imply a lack of demand, which would then imply a diminishment in ZIM's stock price. Now, that is valid, but how much of that is already built into the stock, I guess, is the other question, because as we also realize, ZIM is trading at a PE ratio of about 0.6 right now. That's way lower than its competitors. Like Dano Shipping is trading at about a 2. Some of the other shippers are trading at like a 1.5. 0.6 is ridiculously low. So just keep that in mind in terms of like, does that mean the stock can't fall further? Of course not. Of course it could fall further. But it's already fallen so much, so keep that in mind in terms of how much can it really go based on the numbers, based on how much cash they have. And just to reiterate, so, their CEO, Eli Glickman, even said, so the first half of the year was the best year they've ever had, without doubt. And we've seen that. The stock price was going crazy, over $80, and it just wasn't sustainable, and clearly it hasn't been. But what does that mean for the future of ZIM? Is it worth holding or selling or buying more? Only you can answer that. But just to reiterate some of the numbers, so we've seen this. So they paid out that $4.75 dividend, which is great. They're going to continue to pay quarterly dividends, according to their CEO, which is great. It'll just give some income to their stockholders. Right now, they're offering that a yield of 111%, which is insane. but that's because the stock price has fallen below, into the mid 20s. So it's a crazy dividend yield. Will it continue to pay that out? Who knows? It probably won't be as high because it's a percentage of their income, but according to their CEO, at least, they will continue to pay these high dividends going forward and return that value to shareholders. But again, all stuff we already know. They're offering this massive yield. Can they sustain it? Who knows? They've fallen. The stock has fallen a lot already. And here are some interesting numbers. So second quarter dividends were, as we said, $4.75. This is approximately 30% of the second quarter net income and a 10% one-time catch-up from the first quarter of 2022. Okay. It could be attributed to ZIM's increasing its average freight rate per TEU, which is what we've already kind of know, that their TEU rate, the amount of money they make per their 20-foot equivalent, is substantially higher than their competitors. In our last video, we looked at Maersk, we looked at some other companies. Their TEU profitability is substantially higher than anyone else, and it's a year-over-year increase of 54%, which is great. So all that bodes well. Of course, there are those negative factors that we just discussed. And another factor I wanted to discuss was the fact that starting in 2023, on January 1st, that's when new emissions rules go into place for freighting companies, for freighters on the open ocean. So what will that mean, these new emission standards? Well, ZIM is actually well placed for this because it has a contract already with Shell to provide LNG to start powering a bunch of their freighting vessels, which is great, and which means they should have an advantage coming into 2023 in that they'll already have much of their fleet in compliance with this new regulation. But what will happen to the market, or to the shipping market, when this occurs? Well, if there's continuing to be sufficient shipping volume, it'll slow down because companies will have to catch up to the regulation. If there's no demand, either one or two things are going to happen. And we'll see. I mean, this last quarter is traditionally the best quarter for shipping companies. This is where you have Christmas and all the holidays coming up and people are spending like a bunch of money. This is typically when October, November, into the end of the year, when the stock market has some of its best months. So there's a lot of money in the system and people spend it. And that should help ZIM, but will it? Depends if people are going to spend this year, or maybe they won't because of economic concerns or whatnot. But if there is a lack of demand, then either the older shipping vessels are going to either just be scrapped, or they'll have to be retrofitted to account for these new emission standards. But either way, that'll be taking shippers off the market, which should ultimately help a company like ZIM and lead to increased shipping rates. Will that play out? I don't know. I mean, it could, it might not. Let me know what you think in the comments section. Are you hanging on to ZIM? Have you bought any more shares? Do you think it's bottoming out now? Let me know what you think in the comments, and I'll catch you in the next one.